Welcome to the Pro Farmer Podcast, your source for what's impacting prices today and your guide to what will impact markets in the weeks ahead. More substance, less fuss. The Pro Farmer Podcast starts now.
Welcome to the Pro Farmer Podcast, everyone. Thanks for tuning in. Davis Michaelson here. It is June 9th, 2025. Glad you're along with us. Don't forget to like and subscribe. We present one of these each week, and I'd hate for you to miss a single one. Pro Farmer editor Brian Grady joins now. Brian, good morning. We've got a week ahead of us here, don't we?
Absolutely, and I think you said June 9th. That's a critical one because July 9th is the deadline for increased U.S. tariffs, and so we're 1 month away from that right now, and so obviously that's a major focal point. U.S. negotiators are talking with China, Japan, India, South Korea, Vietnam, you name it, and agriculture is a big portion of those negotiations. So the U.S. Trade continues to run at a major deficit for agriculture, and so that critical in those talks, and we'll see how they develop, but definitely on the watch list for this week.
Boy, it'd be nice to get and we're getting off track here already, Brian, but man, it would be nice to get quick resolution to these trade negotiations. But dude, the reality is historically these have taken months, sometimes a year, even more to get these finally done, codified and up and running.
Yeah, absolutely. So I think the key here is the framework stuff. So we saw with the United Kingdom, we got the framework deal in place, and now they've been given a 5-week timeline to get that finalized. I think that similar type of deals will come into play for the other countries, assuming that we continue to move forward with negotiations. So framework first, then implementation, or then finalized deal and implementation after that. And so it will take some time. From a market perspective, I think the key is that they get the frameworks in place first, and that'll determine the kind of the mood of the markets.
And I don't know if we can necessarily expect the markets to be responding to these negotiations. We may get a positive headline and get a quick pop or something like that. But I think overall, broadly, the market's just going to do what it wants to do. Aside from this, isn't it? In the meantime.
Yeah, absolutely. I think China obviously is probably the key there from a trade perspective. India looks like it's probably the closest to getting something done. And so we'll see on that front. Japan may be the slowest of that process. It looks like South Korea's new president wants to get something done relatively quickly on that front. And so there's a lot of irons in the fire, but China will be the critical one, obviously, with the U.S. and China being the world's two largest economies.
Yeah. Well, in the meantime, we'll hurry up and wait. We got to talk about these markets, Brian. Last week, when we closed out these markets, I had wheat futures higher. I had corn futures just, we're going to call them mixed to mildly higher. And of course, the bean market was up. We had the July up a nickel and a little bit more. The Nove was up 3 1/4. Let's stick with the grains here for now because the livestock's another eye-popping performance last week in the livestock sector. Talk to us about last week in the grains, though, Brian, please.
Yeah, so we talked the trade stuff already. Then we have weather. We have USDA's June reports coming up on Thursday, and so there's a lot of data coming at the market, and their traders are digesting all of that. I think that probably we've put in short-term lows in the markets unless something disastrous happens. But with that said, I just don't see a whole lot of upside either, unless there's some real positive news on the trade front. I don't look for any surprises in USDA's Thursday reports. The bigger reports in June typically come at the end of the month with the quarterly grain stocks, and then the acreage numbers. So that will be updated from the March planting intentions.
All right. All right. I want to talk about these livestocks here. On Friday, I had the June live cattle $3.40 higher. That's up to 226.30. Now that's our front month contract there. So let's look out to the October. The October's still up $1.55 at 215.52 and a half at Friday's close there. What's the setup here in cattle for the upcoming week?
Well, all-time highs in the futures, and chasing, the cash market um, continues to just put in a tremendous performance, all-time highs there as well. And so the futures are still at big discounts despite their all-time highs, and chasing the cash market to the upside. Wholesale beef prices, they've kind of stalled out, potentially in the mid 360 range for choice, mid 350 range for select, and those are big numbers. The second all-time highest levels for both, behind the COVID year in 2020, and so typically that would be a story unto itself. But man, the futures, all-time highs, the cash market all-time highs, and just an incredible performance there.
Well, I've got August feeders up. It took all of $1 to get to a new all-time high, 310.15 at the close on Friday in the cattle and the feeder cattle.
Absolutely, and so we'll probably see the feeder cattle top out first at some point. Buyers will wave the white flag, so to speak, and say enough is enough. And typically, when you get into this uncharted territory and rarefied air, so to speak, you get blow off tops, and so we'll kind of be watching for that moving forward here.
The hogs had a pretty sporty day on Friday as well, although the June contract gapped higher. Did they leave that gap open, or have we got that filled?
Yeah, so June is going into expiration here, and so it's got just a less than a week here, and
Okay.
so that one will sync up with the cash index. It be settled against the cash index. So now we transition forward to the July and August contracts for those summer months, and see how they will react, and they're pricing in that we'll continue to see more strength in the cash market. So the cash climb has been slow and steady, though it has picked up some speed here over the past week or so.
All right, I've almost taken up enough of your time this morning, Brian, but I do want help us get our heads around what's coming up this week. Reports coming out. What should we be watching? What will you be watching?
Yeah, so we talked about trade, we talked about the reports, and the other factor is weather, and it's been really
Yeah.
wet through the southern U.S. That includes the Tennessee River Basin. Expected to be wet in those areas again this week. Excessively wet in most of those areas. Through the lower Midwest and Central Plains, drier this week, though that's not a concern because they've received rains recently. And then the upper Midwest and northern plains, there's almost daily rain chances for most of those areas, and
Wow.
so generally speaking, it's going to be plentiful wet over the next week to 10 days or so here, it appears.
Well, Brian, I will look forward to speaking with you again real soon here on the Pro Farmer Podcast. That's Pro Farmer editor Brian Grady. We'll be right back after these messages. Stick around. Hey everyone, Davis Michelson here, and if you're one of the listeners without access to Pro Farmer's daily market reports and policy insights, this message is for you. Right now, you can start a free trial to Pro Farmer, unlocking the same profit-boosting information that farmers have trusted for over 50 years. Sign up online at tryprofarmer.com. No credit card needed. Visit tryprofarmer.com to sign up and get more details and updates on the topics we're discussing today, plus much, much more. Glad to have you back for the Pro Farmer Podcast. Davis Michelson here, now joined by Lane Acree from Pro Farmer. Lane, I know that you love to do these historical studies. You nerd out on prices and with the calendar. You've got a really interesting one here that I think is pertinent for us in the here and now in last week's newsletter from the bullpen. Talk to me about, you know what, let's take them one at a time, because you hit corn, you hit soybeans, and you hit wheat, looking at the June and July time period and how prices historically have performed during those times. Give us your thoughts on corn, please, Lane.
Yeah, I wanted to look at seasonalities just to get a bit of a historical perspective on how prices tend to act in the month of June. And generally, June's a pretty bearish month for corn prices. We see a lot of downside, especially over the last 20 years. And a lot of that's just due to traders, pricing risk out of the market. A lot of planting is usually done by the start of June, and you just see persistent weakness as the growing season is off to a start. It's not a real key growing season time. It's kind of just the crops up and running and, trying to get knee high by the 4th of July. Mm-hmm. And usually we'll see a price bottom sometime in June, generally in late June, we see a little bit higher volatility than we generally see in other months throughout the month of June. And that can be, to the downside is the growing season going pretty well, or to the upside is maybe we're being dry, or maybe we had a really wet spring. But generally the wet springs are not the case. So that's kind of why we generally see a little bit more weakness in the month of June, because planting generally, goes pretty well. And that encourages traders to take risk out of the market. But going back to our summer rally study that we did a couple months ago, we generally see prices bottom towards the end of June, early July. So we'll be looking for a bottom at some time this month. We've already made a new 4th move low here in early June, seeing a little bit of weakness too to start the week. So we'll be eyeing that for a potential start to a summer rally here in the next week or so.
You bet. Well, and it would be lovely if corn and soybeans would act in the same way, but they don't necessarily, do they?
No. Especially that's been kind of the case in recent years. So while, of course, corn favors a bearish bias in the month of June, beans actually, they're a little bit more neutral. And that could be because historically beans are planted a little bit later into the season, and we just see a little bit of that risk premium hanging out. And similar to corn, we've also seen a little bit higher volatility. So the years that the growing season goes pretty well, planting might get done a little early, we'll see some weakness. And the planting season didn't go well, and planting gets pushed later into June, you might see a little bit more strength. So volatility seems to be the norm across corn, soybeans, and wheat in the month of June. And it doesn't seem to be changing at all this year. This year we have even more catalysts on the trade front, negotiations seemingly happening all over the place. So volatility is probably going to stick out for most of this month.
Would you consider? We'll get to wheat here in just a second, but I do want to take corn and beans kind of in the same basket here. Would you consider it? Because it's not everywhere, but it seems like in Kansas City, it's not warm enough. It's too wet. My barometer, my rhubarb is absolutely unhappy and upset this year. Not enough sunshine, too much water. Lane, has it been less than ideal? I mean, planting time seems like it went okay, but everything since then has been too wet and too cold in a lot of spots. What impact might that have on us?
Yeah, it's getting a lot more attention, and that's especially the case in the southern and eastern parts of the Corn Belt. And the market really hasn't respected any of that production risk yet. The market just seems to be keyed in on just the acreage number, really, in corn, weighing really heavily on the market. I think it has a greater effect than the market anticipates for sure, but it's just, 95 plus million acres is hard to shake in corn, and beans just not really getting any respect with the continued risk of the exports to China. And, even here, we finally had some decent weather over the last week, and we're just covered in smoke. It's hard to even see across the river. It's just hazy.
Yeah, that's a whole other thing. I didn't even bring that up. We've got that wildfire smoke that we're contending with. Yeah. It'll be an interesting year. June, the second most bearish month of the year for nearby soft red winter wheat futures. Talk to me about that.
Yeah, somewhat anticipated with harvest selling pressure.
Sure.
And also, out of the last 10 years, every one of those years saw an increase in the winter wheat production estimate from USDA and the WASDE that comes out this week. So I think that probably has a bit of a negative effect on the market too. Just USDA kind of understates that winter wheat production in May. We don't see a huge increase in winter wheat production this week, but we do see a little bit of a modest increase, and that probably weighs heavily on the market too. But yeah, just that seasonal selling pressure that we generally see, but wheat prices are pretty undervalued, still struggling to garner a ton of bullish momentum. We've had a bit of an uptrend, but we're anticipating a high at some point in the next week. Generally, when the market's making new lows in May, we tend to see a high sometime in mid-June. So we'll be looking at that pretty closely.
Lane, just broadly on all three of these markets, if we see an opportunity here in the June and July time period that seems attractive to us, I mean, I know a lot are eyeing that cost of production level, but if we can pop above that and get a quick rally, I feel like maybe we need to reward those with a degree of haste. We need to be ready when the market gets there. What would your thoughts be?
Yeah, that's for sure. These markets, like I said, they've been very volatile. They're probably going to stay volatile. So, these selling opportunities, they might only last for a day or two, might only poke above cost of production, for a day. So we'll be sending out alerts if if we're gonna key out a sale, and we're probably gonna be doing that here in the next few weeks. Just this time of year, there's still should be a little bit of risk premium priced into the market, so taking advantage of that and the recent uptrends that we've kind of seen in wheat, just pulling corn a little bit higher and soybeans kind of going higher on their own volition. So these rallies need to be rewarded, especially with just how bearish things could get, both on the demand side, even on the supply side. Yeah, there's some production risk, but with corn, it's just hard to say really how much of a hit that could really make on the market.
Yeah. So if in summary, what I'm hearing is stay engaged and make hay while the sun shines. Am I hearing you correctly, Lane Acree?
Yeah.
All right. Very good. Very good. Well, we'll look forward to further updates for you. I love your studies in time with these markets. It's fascinating how these markets work. You can check out Lane Acree's writing as well as the rest of the Pro Farmer squad at profarmer.com. If you're not a member, visit tryprofarmer.com. I think we'll put a lid on her for today. Thanks, Lane Acree, for being with us from Pro Farmer. Thanks to Pro Farmer editor Brian Grady, and of course, production support from Zach Zingula. For the Pro Farmer Podcast, it's Davis Michelson.
Thanks for joining us. We'll return next week with another episode of the Pro Farmer Podcast. And remember, everything talked about today is updated throughout the week on profarmer.com and in this Friday's Pro Farmer newsletter.